Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast. Good morning. It's Wednesday, the 24th of December. I'm Caroline Hepker in London. Coming up today, France passes a stopgap bill to keep the state running. Debate on the budget resumes in January. The US sanctions former EU officials in an escalating clash over free speech and big tech. And the co-founder of Brevan Howard, billionaire Alan Howard, has left the UK to live in Switzerland. Let's start with a roundup of our top stories. France has adopted a stopgap budget bill for 2026 to avoid a government shutdown. The so-called loi spéciale allows the state to continue collecting taxes and borrowing money despite the lack of a full budget, effectively rolling over fiscal plans into the new year. Addressing the nation on French television, Prime Minister Sébastien Lecornu explains the situation.
Prendre le temps de bâtir un bon budget.
Taking the time to discuss a budget in a democracy like France is not a weakness. In the meantime, a special law is being discussed in Parliament. It will allow us to continue to collect taxes and keep public services going from January 1st. That doesn't mean it's a budget, and there will be a number of negative consequences if the situation continues.
French Prime Minister Sébastien Lecornu speaking there via a translator ahead of the National Assembly's decision. The temporary legislation comes after the French government warned that the parts of the finance bills agreed so far would only bring the deficit to 5.3% of economic output in 2026. That's down from 5.4% this year. The National Assembly is set to resume debate on the full budget in early January. The Trump administration has imposed visa sanctions on former EU Commissioner Thierry Breton as a punishment for his work regulating big tech. The US State Department has also targeted 4 other people leading organizations focused on digital hate speech and countering extremism. Secretary of State Marco Rubio announced the move on social media, accusing Breton of extraterritorial censorship. The Global Disinformation Index, meanwhile, in a statement called the US sanctions an authoritarian attack on free speech and an egregious act of government censorship. In a social media post, Breton himself, who is also the former CEO of Orange and Atos, responded by asking whether the US is returning to McCarthyism of the 1950s. Now, in market news, gold has risen above $4,500 an ounce for the very first time, while silver and platinum also advanced to record highs. Precious metals are ending this year with gains not seen in decades. Bloomberg's metals reporter Martin Ritchie says global uncertainty has helped to drive this rally.
You can never imagine prices at this level even 2 years ago, but here we are. And I think this December rally that you've seen in gold and in the precious metals is really a kind of continuation of the same themes we've seen throughout this year. It's about the debasement trade, growing sort of mistrust in traditional assets, the sovereign bonds and currencies. It's about the weaker dollar. It's about central banks buying gold because of those things.
Ritchie adds traders are now betting the US Federal Reserve will lower the cost of borrowing again next year, which would be a tailwind for non-yielding precious metals. The gold spot price this morning is trading at $4,487. Now, let's also think about the data. The US economy expanded at the fastest pace in 2 years. Real GDP increased at a 4.3% annualized pace in the third quarter. Economists had expected growth of just 3.3%. The surprise has pushed up Treasury yields as traders factor in the resilient consumer spending. The data was delayed due to the US government shutdown. The release of the so-called Epstein files has so far failed to satisfy the US public. The US Department of Justice has released thousands of pages of heavily redacted records and photographs related to the convicted sex offender, but the document dump has drawn criticism for missing a December 19th deadline and for the heavy redactions. President Donald Trump says the saga is unfairly tarnishing individuals.
A lot of people are very angry that pictures are being released of other people that really had nothing to do with Epstein, but they're in a picture with him because he was at a party, and you ruin a reputation of somebody. But I never went there, but a lot of people did go there.
President Trump speaking there during a news conference last night. Included in the latest batch of released files is an email sent from an individual named A, saying they are at the British royal family's Balmoral residence and asking Jeffrey Epstein associate Ghislaine Maxwell for, quote, inappropriate friends. In October, Andrew Mountbatten Windsor, formerly the Prince and Duke of York, lost his titles following scrutiny over his links with Epstein. One of the co-founders of Brevan, Howard Asset Management, has left the UK, adding to concerns about the exodus of Britain's wealthy. Alan Howard has a net worth of roughly $4.3 billion and, according to a Bloomberg analysis of regulatory filings, now lives in Switzerland. Bloomberg's James Wilcock has more.
This year, Switzerland voted to reject a 50% inheritance tax, while Britain expanded its version of the levy. Alan Howard may have followed the incentives. The Brevan Howard co-founder declined to comment to Bloomberg for the story, but the billionaire now joins the ranks of many of the financial elite we have reported on leaving the UK. That exodus is a worrying trend for the government, as it is banking on higher tax revenue and growth from the wealthy for its economic agenda. In London, James Wilcock, Bloomberg Radio.
And those are our top stories. Let's have a look at the markets this Christmas Eve. Quite a bit of cheer. Global stocks climbing to a record high. Got a fifth day of gains for the MSCI All Country World Index, up 0.1% this morning amid very low trading volumes, it has to be said. But the S&P 500 index closed at an all-time high on Tuesday. Stock futures are in the red, though, both for Europe and the US. Also, treasuries have been very range-bound since the start of December, really. 10-year Treasury yields this morning at 4.15, so still solidly within that range. Traders paring back their bets on Fed rate cuts for the 28th of January, just a 16% chance now. Scorching rally in gold, silver and platinum. Gold trading below $4,500 a troy ounce this morning, though. Remember, markets close early in London, 12:30 p.m. Today. Half-day trading across Europe. Milan and Oslo already shut today. NYSE and Nasdaq close at 1 p.m. US time today. Those are the markets. Now, in a moment, we're going to bring you more on the scorching rally in precious metals and fresh highs for stock markets, plus also a cold snap expected in the UK and Europe. But before I get to that, something else has caught my eye today. I've been reading the 5 top tables column from Bloomberg Pursuits. You may not have eaten your Christmas pigs in blankets yet, but we are already bringing you some ideas of how you can eat well in the city that does Hogmanay. That's New Year's Eve to you and I. Does it like nowhere else. Of course, I'm talking about Edinburgh. And no, it's not just deep-fried Mars bars that passes for Scottish cuisine. The food scene, especially in the port of Leith near Edinburgh, is really growing thanks to things like quality halibut and langoustine. On the list from the team to try out if you are in Scotland, Café Colton, Dulce in Leith, which is a restaurant named after the unusual seaweed in Scotland, and Macca's Mash in the Old Town. I won't spoil the rest. I'm going to put a link in our show notes in case you are headed to the Royal Mile anytime soon, maybe even for a New Year's Eve Kaylee. Well, let's discuss the holiday cheer in the markets then. Global stocks, the S&P 500 hitting record highs amid thin trading. Treasuries range bound, as I said. Bloomberg's Markets Live strategist Mark Cranfield joins me now to discuss. Good to have you on the programme. Thanks for your time. So that third quarter US GDP beat almost across the board really helped things yesterday, didn't it? The US has seen 3 years of very good gains for equities. Do we think it can continue in 2026?
Well, the conditions are still pretty good. So you've got this almost ideal scenario where economic growth is beating expectations, and yet people are still pricing in further rate cuts from the Federal Reserve for next year. And when we get the name of the next Federal Reserve chairman, presumably that person will be endorsing lower rates as well. So that's a good situation for equity markets. And then you've got the other thing in play here is where you've got huge companies like OpenAI and SpaceX who have been raising money at massive multiples, and they want to bring their companies to market. So while you have the potential for very big IPOs coming in the early part of next year, they would come at prices which are also inflating those for other tech companies as well. So people are emboldened to stay with the market equities in case these huge companies come to market and generally boost the overall market as well. So it's a self-reinforcing situation at the moment, and there's no obvious thing in place that would derail it.
Yeah, that would be interesting if some of those AI companies actually went public, wouldn't it? In terms of the other story that we've watched so closely and amazingly, the rally in gold. So we peaked above $4,500 just briefly. We're back below that level now. But silver and platinum have also been on these incredible runs. Goldman Sachs is among several banks predicting gold prices will keep rising in 2026. I suppose the question for that is why?
You've almost got a perfect storm, a positive perfect storm here for the precious metals at the moment. So you've got a weaker US dollar, which is always good for the metals space. You've got potential for interest rates to be coming down even further. So there's no hurdle from the US Treasury. One of the worst things for precious metals is when Treasury yields are rising too quickly. That isn't the case at the moment. They may even go lower if the Fed cuts rates again. And then you've got geopolitical angst at the same time. So you've got the United States conflict with Venezuela. Russia and Ukraine is still unsolved. There's no sign of a truce there. So it's very unusual to have a situation where people are hedging with precious metals because they're fearful of the global situation, and at the same time the US dollar is weak. So all of those things together for the time being are very supportive for the metals market.
Yeah, absolutely. The other thing worth mentioning, though, is that Asia's stock markets have actually beaten US and European ones this year. MSCI Asia Pacific Index up 27% if you include the dividends, which is also really kind of interesting to note as this has been such a strong year.
That was partly coming from a very low base. One of the best performers in Asia this year was the Korean stock market, which ended last year in pretty rough shape. They just had some pretty nasty news about the military in Korea at the time. So they were starting from a low base. The currency was relatively weak. So Korea's had a great run this year. Other markets also were starting on the back foot. So relative to the US, they looked pretty cheap at the start of the year. That gap is narrowing, but it hasn't completely. Already seeing some of the currencies, Asian currencies, started to pick up steam, which if it continues into next year will be another tailwind for Asian markets. If there's a chance for currency appreciation and upside for the markets, then that will draw in more international investors as well.
Yes, that's one to watch. Mark, thank you so much for being with me this Christmas Eve. That is Mark Cranfield, Bloomberg's Markets Live strategist. Stay with us. More from Bloomberg Daybreak Europe coming up after this. There's something else I want to think about, though. Sub-zero temperatures, which are expected across parts of Europe. It's already started here in the UK, and it's expected to push up heating demand. Let's bring in Eamon Farhad, who is Bloomberg's European Power and Renewables reporter. I thought this felt like an appropriate moment to think about, well, it's a very bitter cold snap that has already begun. How long do we think it's going to go on for, Eamon?
Yeah, you're exactly right. I mean, in the UK, we're going to have some temperatures around 5 degrees over Christmas. Now, that doesn't seem that cold, but when you bring in the wind chill, which is coming in, it would probably feel like below freezing almost throughout the Christmas period. Now, if stay around the 28th, so between that Christmas and New Year period, we might get it rising a little bit, but by New Year's, again, it will be going back down below zero across the UK. And the same picture is the case in Europe. Paris as well, seeing sub-zero temperatures throughout the period. So it'll be about a week of chilly temperatures across Europe and the UK.
Bitter. So what does it mean then for power output and demand? I mean, something that we've kept a close eye on, obviously, really, since the disruption of and the stress of Russia's war in Ukraine.
Yeah, definitely. I mean, this year, the Christmas period could be one of the coldest since 2010 in the UK and Spain and even parts of France. So that will push up power demand. That being said, when it is a holiday, bank holiday or Christmas, for example, power demand is always a bit lower because people aren't using energy in the same ways. So that'll be interesting to see how those two things interplay. That being said, gas will probably increase over this period because people will be trying to turn on the heating and all that. So people will be watching that closely. Traders are always looking at cold snaps in Europe to see how that affects gas levels going into next year.
Yeah. Bloomberg's Weather Watch newsletter has been also tracking the ski season. What does it tell us about the planet's ever wilder weather?
Yeah, I mean, this ski season, anyone heading to the slopes is probably checking on their phones, but there was some big dumpings of snow, some very cold weather in November and early December, and then it kind of all dried up. If you're going to the slopes right now, you're probably going to have some icy conditions, because across the Swiss Alps, places like Verviers, across Austria, St. Anton and Val d'Isère in France, there hasn't been that much snow the last couple of weeks. There is a bit of few dusting as expected, but it is a bit dry, and it's just showing that changing pattern, how we're getting much earlier snowfall, not as much over Christmas, and maybe some more later in the year, so it's definitely less consistent than in previous years.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.